Hello and welcome. This is NTA Tuesday Live, and I'm Cyril Stober. Now, as the 2026 tax implementation cycle begins, the federal government is highlighting the transformative pillars of the Nigeria Tax Act 2025, describing it as a paradigm shift designed to stimulate economic growth by protecting the vulnerable and simplifying the business environment. The new regime, consolidated from over 60 disparate taxes into fewer than 10 clearly defined statutes, marks the most ambitious fiscal overhaul in Nigeria's history. The reforms prioritize fairness, replacing regressive nuisance taxes with a modern framework that aligns with international best practices. Now, the 2026 reforms introduce immediate relief for the majority of Nigerian workers through significant exemptions and restructuring. Individuals earning 800,000 naira or less annually are now completely exempted from personal income tax, providing immediate breathing room for low-income earners, among other critical services of life, especially for low-income earners and small-scale businesses. Tonight, NTA Tuesday Live will continue the focus on addressing grey areas in the new tax laws. But before we get to the discussion, let's see this report put together by correspondent Benny Adams.
Nigeria's fiscal architecture is undergoing its most significant transformation in decades. The transition from the Federal Inland Revenue Service to the Nigerian Revenue Service is now complete. But as the new leadership takes their seats, the public square is flooded with questions. Is this just a rebranding exercise or a true systemic shift? In addition to this, is widespread misinformation.
If I got like maybe 400,000 to sell my market, I'll carry go put for bank. Bank will withdraw the money again.
So I don't understand anything yet about it. That's the only thing I can see. But anything about taxing or something, I haven't seen anything on my account yet. And I've been running the account with millions of naira for the past 4 or 5 days now. I couldn't say anything.
The only changes we see there is just the 15 naira charges, which was being deducted before by the receiver before. Now it's being deducted by the sender now. So that's the only changes. But the original tax issue, deduction of the tax, we can only experience that maybe the month end, we know our fate.
Government says the reform underscores a social contract where Nigerians are asked to pay because their contributions fund the infrastructure of the future.
We believe that over time, you get revenue from growth. When the economy is growing, people pay not because the tax rate has gone up, but because the base has increased. Number two is these reforms have rationalized a lot of wasteful and incentives that are distortionary, which is in itself not helpful for the economy. And number three is we see as a result of this transformative tax reform, increasing awareness of and then tax culture and therefore improve compliance. So if people that were not paying before start paying, and they're not people who are low-income earners, not only do you get more revenue, you get fairness for society.
In return, the NRS commits to transparency in how those taxes are assessed and collected.
The tax is going to be wider. We're creating a system that will be solely driven by technology. The human interface will reduce, leakages will be blocked, and there will be more revenue for government to provide services for the citizenry.
With the transition phase largely in rearview mirror, the NRS is now positioned to move from theory to implementation. The question remains, can a change in structure truly lead to a change in culture?
The only reason why we are much more concerned and seeing this as a problem is because we have not been paying our taxes. These laws are already there, and the reason why they are there is to help and assist government in carrying out its responsibilities.
A good development, if it is something that will help the citizen of Nigeria, help us as a trader too, if it's something that will bring positive change.
If government could use the tax money very well. It is worth collecting tax or paying tax. I'm a taxpayer.
Is the NRS truly equipped to tax growth and not struggle? Or is the Nigerian taxpayer right to be cautious?
Because these reforms are designed to provide relief to the Nigerian people. Bottom 98% of workers will see either no PAYE tax or lower taxes to be paid. Small businesses, 97% of them will be exempted from corporate income tax, VAT, withholding tax, and large businesses will see a drop in the taxes that they pay. The whole idea being to try and promote economic growth, inclusivity, as well as shared prosperity for our people. So we're actually excited at the progress we're making.
In the studio to navigate these waters are a team of experts. Do take a listen.
Well, the report sets the tone for tonight's discussion. Let's introduce our guests to you. I'd like to welcome to this program Professor Uche Ualeke, is Director, Institute of Capital Market Studies, Nasarawa State University, Kefi, and President, Capital Market Academics of Nigeria. Prof, always good to have you join us.
Thank you so much. It's my pleasure.
Thank you. Let me also welcome to this program Innocent Ohagwa, the 17th President, Chartered Institute of Taxation of Nigeria. Thanks for being here tonight.
Thank you. Thank you. It's a pleasure.
Right. And we are being joined by Dr. Haruna Yahaya, President, Institute of Chartered Accountants of Nigeria, ACAN. He joins us via Zoom from Lagos. Good evening.
Good evening, viewers.
Right. Thank you so very much for being here. Well, Prof, someone said the new tax laws, it's something that the discussions won't go away. And all kinds of angles continue to emerge. All kinds of issues have been raised every day, and we envisage that it will take some time for the explanations to get around. But let's start to put things in perspective. And Dr. Haruna Yahaya, if you're there with us, for you, what are the gray areas you might have noticed in this new tax laws? And from the discussions around you, what are people most skeptical about and on edge about the new laws?
Thank you very much, Cyril. The most dangerous gray areas in this new tax law is ambiguity in the tax provision and understanding of the citizens, because naturally, debt and tax are things that people are not ready and willing to pay. So any ambiguity in the provision will be taken advantage of for people to try to avoid paying tax. So the law has come into effect, and the awareness will continue. We need to do more awareness for people to understand the tax provisions and to avoid any ambiguity in the tax laws. So the gray areas are because of the new things that were introduced that people are not used to before, because taxation is a constitutional provision which has been there since independence. Even the 1999 Constitution, Section 24F, provided that as part of duty of the citizens to declare your income correctly and pay appropriate tax to the relevant tax authorities. But people are seeing this as if it is a new thing. No, taxation has been with us all along. Yes, tax is a function of activities economic activities that is being taxed. So this new tax law tried to codify, simplify, and consolidate pockets of taxes that are being collected by the three tiers of government before, the federal, the state, and local government. Before now, we have over 60 types of taxes that are being collected by these tiers of government, which has now been consolidated into about 10 or thereabout. And a lot of incentives has been given. The new economic activities, which have not been hitherto there before, like digital assets, are now brought into the tax rates, and people that engage in those transactions will be expected to pay tax. So the gray area, to go back to your question, is the ambiguity in the provision, and it is expected for any new thing, people are bound to express some apprehensions, misconceptions, and so on like that. But as we go along, water will find its level. Thank you.
All right, thank you very much. And we've just been joined by Albert Folorunshaw, who's a member of the Presidential Tax Reform Committee. Thanks for being with us.
Thank you.
Right, we'll get to you in just a moment. But Prof, again, the same issues. So many things flying around, not the least all kinds of issues regarding who's going to pay and what is going to be paid, and if there are new taxes that are coming in. And of course, as you well know, what guarantees that even when you expand the tax net and you rake in more revenue, what guarantees that what you bring in will be for the benefit of the citizens?
Exactly. Once again, thank you so much, Cyril. I think it's even on the basis of this question that you have asked me that I want to start by commending NTA and particularly, your program in trying to, help sensitize Nigerians on what the tax reforms, are all about. You see, this is the third major reform we are having in this administration. The first one was fuel subsidy removal, and it came with pains. Mm-hmm. The second one that happened almost immediately, the forex unification, exchange rate unification. Again, it came with pains. So when Nigerians now hear reform again, it's not natural that they will feel this reform again is also going to come with pain. But unlike the first two, which came with, as I said, we all experienced in 2023, the immediate shock that we had. This one is a different type of reform. As your intro rightly captured, this is one reform that is actually meant to help the vulnerable, out there. And as far as I'm concerned, the reform is already, achieving, some level of success, to the extent that today a number of Nigerians are now a lot more conscious of, taxes. Okay, you will agree with me that the level of awareness of, yes, taxation in Nigeria is low. So, but what this reform has now done is to kind of raise it. Now, people are, asking the right questions. A lot of people are waiting actually, till the end of the month to also see, what will happen to their, to their income. But by and large, it's actually meant to, help the poor. Now, there's something I also want to point out in the intro that I watched. The exemption threshold for personal income tax, the payee, is actually above 800,000. Because 800,000 is not the gross income. 800,000 is the net, what we call the taxable income. So you'll find out that somebody earning, say, 1.2 million, 100,000 every month, will end up at the end of this month, not paying any tax at all. Because by the time the reliefs are all deducted, there are 6 of them, by the time they take out your National Housing Fund, they take out your National Health Insurance Scheme, the one you've paid for the annum, they take out your pension contribution, they take out your, for the owner-occupier house, the mortgage interest you have paid, they take out your life insurance, both for yourself and for your wife, for your spouse, okay, and also remove rent relief. Rent relief is 20% of the rent you have paid, or maximum of 500,000. By the time all of this is taken out, you realize that most Nigerians, and that was why the chairman, the committee was saying that 98% of workers may end up not paying anything at all, and that will become manifest by the end of this month. So the good thing is that in the tax reforms committee website, fiscalreforms.ng, and I want to encourage Nigerians to always visit that website, fiscalreforms.ng. If you go there, you go to implementation option, and you click on personal tax calculator. Put your income on that tax calculator and see what your tax will be at the end of the month. So if at the end of the month, what they're asking you to pay is higher than what the tax calculator has shown you, you can now complain. You can now say, no, this is not what I'm supposed to pay, based on what my tax calculator has produced. And if you complain and you're not attended to, that is also why in the tax laws we have the tax ombuds. There's a provision for a place you can go and complain, and the services they will render to you, will be completely free of charge. So I think it's a very, very good thing that will be in the interest of Nigerians.
Well, what you have just said now is extremely important, because I know many people would want to try that out and go and check and see, look, where do I fall in, and how much would I be paying, and trust Nigerians, they'll keep an eagle eye on those finances and see just how it is. But we'll explore that further when we come to our guest who's part of it all. But let me go to the 17th president of the Chartered Institute of Taxation of Nigeria, Innocent Ohagwa. Are the fears of additional and extra taxes justified?
Thank you very much, Sir Cyril, and thank you, viewers. The fears is not justified, because the package is a package of blessing to all Nigerians. The fears may also be caused by, if we need to profile the various types of taxpayers, those who will willingly pay, those who will pay if you tell them what to do, and the category that will not wish to pay unless they are forced. I've been involved in advocacy in churches and in the association which I belong. And one thing I usually pass through is that the group of Nigerians and the group of residents whose this law is supposed to protect are those that are complaining most. And those that it will impact more in terms of incidents don't even care, because many of the complainants are those whose this law is protecting. You hear when the student union, Nigerian Union of Students wanted to go on strike over this. You can find out that they are the major beneficiary. Is it the Nigerian Labour Congress? You see, for those who before now are not used to complying with tax obligations, the self-assessment regime, you find out that they see it they are dreaded the possible consequences of this law. But part of the advocacy is to continue to assure everyone that the law means well. And us as an institute, we are happy with the law, not because it is perfect. There's no mass reform of this nature that you will not find issues. But that will not remove anything excellent from the laws. So it is necessary that we give it a trial. And this trial requires support of all stakeholders, support of the citizens, support of the taxpayers, support of the professionals, and National Assembly too, that have done greatly. To also remove fears that is being expressed is the issue of when an average Nigerian wants to have hand on this law. He can, see it. So I want to use this opportunity to appeal to the National Assembly or relevant authority to ensure that the confirmed tests of these laws are made available, so that people will lay hands upon it, read it, and read it. Because when you allow it to be very scarce, then the possibility of running into the wrong ones will be there. So to summarize, I would say that there's no cause for alarm, and the fears should not be expressed. The law is fine.
Well, of course, there's another raging controversy about what was passed and what was gazetted, the difference between a law that's passed and a law that's gazetted and the implementation. And all this is happening because many people would like to lay their hands on the laws and read to see exactly what it is all about. But for now, the speculations and the controversies continue. But let's hear from Albert Folorisho, who is a member of the Presidential Tax Reform Committee. There is one issue, this particular one, that's going round and round and round. Please explain. I mean, in very clear and simple terms. It has to do with the question of transfers, electronic money transfers, with all kinds of stories about what's going to be taxed, what is it being taxed, money that has been earned that has been taxed already. By the time you move in the money to another account, another tax comes in, and all kinds of explanations, and a lot of people are confused. Can we have what this is all about?
Thank you very much, and thank you for inviting me. And let me also say thank you to NTA for the job that is being done. All that we need for this law now is for the generality of Nigerians to be familiar with it and know the truth. Just like you mentioned, we have all become preachers in churches, in mosques, everywhere you go. Even your closest friends that are very knowledgeable, they are confused. They have decided to be confused sometimes. So the issue you have raised in terms of transfer, what we have in the law, which is stamp duty, we used to call it the electronic money transfer levy. The only thing that has changed is the fact that it is the transferor that should bear the 50 naira on the transfer. And that is the only charge. Now, in banking, there are a lot of charges that you incur when you are doing banking transaction. There is the COT, if you want bank drive, they charge you. So they are rendering service. Mm-hmm. And so for all services, when you render a service, you should charge VAT, which is the value-added tax for the service you have. So that VAT is on the charge by the bank. Maybe you do 100,000 transfer. There's a 50 naira transfer levy. There is maybe COT of 3 kobo per mil. Okay? And it is on that 3 kobo per mil that the 7.5% is charged. Okay? So at the end of the day, it's just And it's not new. It's not about this law per se. What this law has brought, which people are not speaking to, is the fact that you that is doing business and you are being charged this 7.5%, you have the opportunity of recovering it. Before now, what happened is that except you are into buying and selling, or you are into manufacturing for resale, you are not able to recover the VAT you incur. But with this new law, the VAT on your overhead, you are allowed to recover it. The VAT on your fixed asset that you are using in generating the business, you are allowed to recover it. The VAT on the goods you are manufacturing for resale, you are allowed to recover it. So businesses are smiling to bank, as far as I'm concerned, because their profit will be elevated. And nobody is speaking to that. We are even hoping that maybe because that is going to be a reduction in their expenses now, some level of bringing the cost of prices of goods down should even be contemplated, though nobody can control that. So that aspect, I mean, is very positive as far as the law is concerned. Now, when it comes to whether you be taxed on your bank balances or inflow into your account and all that, nobody does that. Tax is on profit, not on cash flow. The cash flow is just what banks charges you because they are helping you to move money. And the essence of the 15 naira, because it is stamp duty, is to show that if there is an issue, I give you an instruction to transfer. Okay? You need to, there's a document that is involved. That document needs to be stamped. That's why we call it stamp duty. So that in the case of litigation, that instrument can be given in evidence in a court of law. That is the essence of the 15 naira. Now, in terms of your normal banking balances, I'm not saying that tax authorities are not going to be wary if you are just having balances, unexplained balances. There are several portfolio businesses that have balances. Maybe they are taking contract. But not that I give you money. If a gift I give someone in your account, it's not an income. And in Nigeria, it's not even taxable. It is called capital transfer tax or inheritance tax in UK. It's not taxable. If I borrow money to build a house, the cash flow of the money coming into my account is not taxable. If I dash people, or you want to do any specific transaction, and money is flowing into your account, it does not represent income. And you should also not allow your account to be used as a conduit for transferring money. You know, you get to a level and the tax authority are worried, what type of business? You now need to explain. All and right. That's where tax authority may be put on inquiry.
Well, that's for those doing businesses. What I want to harp on is for the small guys who are making daily transfers, the small guys who are buying stuff and transferring and paying through bank transfers, and all those are going back and forth. That's the one people are getting so confused about. I mean, with some people flying around with all kinds of claims that there has to be explanations, and it's all sounding all ridiculous.
Totally ridiculous.
And the other aspect as well, having to deal with whose money is it anyway, when it's the bank charges that the VAT has been paid on. And for those who run the businesses, who before now couldn't recoup the VAT, how do they go about doing it? Because for many, this is novel.
Okay, I will explain. So it depends on the level of your business transaction. For the very small people whose turnover does not exceed 100 million a year, you don't really need to pay VAT. All right? So if you incur, if they charge you VAT, it becomes your cost, except you opt to say that because I now know my business is substantial, I want to be able to recover it. It is automatic. When you file, in filing your return, when you sell small item, whatever you are doing, even if you are a repairer, and you repair, somebody pay you, okay? They will, before the person pays you, you probably have charged the person VAT, which is due to government. But before you pay government, you buy spare parts to do the repair. In buying the spare part, you have incurred some VAT. That VAT you incur, you must take it out of the one that was paid to you. If there is difference, you pay to government. If what you have paid is more than what you have charged, then you have something to recover from government. So for those small businesses whose turnover are not more than 100 million, they shouldn't even be worried at all, because government does not even expect that they will file any VAT returns. And that is that minimum threshold. When your business is going beyond 100 million into medium and large, you definitely know how to take your recovery. When you are doing business, you charge. When you are buying we are buying material, buying raw material, buying inputs and all that, you pay. At the end of the month, whatever you have charged people that are paying you, you deduct what you have paid when you were buying the raw material. I'm talking about the VAT. So really, it is a major thing that has been included, and even for government to be profitable on this VAT, ordinarily the rate should go up. But the government said no. It's not about, it's the principle that is very important here. We want to practice proper VAT, not sales tax. VAT is such that you have an output and you have an input, so that if there is any difference in between, which we call the value added, okay, you buy something for 100, you tidy it up, and then sell it for 150. It means you have added a value of 50. It is the VAT on that 50 that ordinarily should go to government. That is if your turnover is above 100 million.
So the small guys don't need to worry about
at all.
Okay. Well, we also have a number of reports. Let's get to see this one from Lagos.
With the highest concentration of corporate activity in the country, Lagos remains central to the debate of tax. Authorities say corporate income tax still applies to profits, not turnover, with reliefs and exemptions for small and medium-scale enterprises.
Today, all of this has been consolidated to two, just company income tax and development levy. So you do not need to pay all those multiple NITA, police, education tax again. All of those things, you just pay one line, development levy. And the new rate is now for company income tax 30% today, development levy 4%, bringing everything to 34%. I believe that from administrative perspective, it makes it relatively easy for companies to comply.
On property taxation, officials say the new laws do not introduce fresh taxes but clarify existing obligations, separating federal provisions from state and local property charges to address fears of double taxation.
The only thing that is being introduced is on the capital gain tax that has to do with proceeds on the sales of assets and property, which before now it's 10%. But has been increased to 30%. And the brain behind this is that you cannot be charging the productive arm of the economy who are into manufacturing, production, asking them to pay a company income tax of about 30%, 25-30%. And those that invest in the sales of property, goes on with 10%, which used to be the former order of the day.
Yes, some old taxes have been changed, but just amended. While new taxes have not been introduced, the way of collection has changed. The filing requirements have changed. And what is liable to be taxed, who is liable to be taxed, has also changed. The Nigerian Tax Act reduces the tax burden on low-income earners and in favor of increasing the tax burden on higher income earners.
At Lagos ports, excise and custom duties on specific imported goods remain targeted. Authorities say the focus is on clearer classification and administration, not blanket increases, easing concerns over price hikes. Overall, regulators say the reforms aim to improve clarity, compliance, and fairness in taxation.
From Lagos, we go over to Kaduna for this next report.
You have the Tax Administration Act, the Tax Reform Act, the Joint Revenue Act, and the Nigerian Revenue Service Act. And essentially, to bridge some of the income differential between the rich and the poor.
Personal income tax, usually deducted directly from wages through the pay-as-you-earn system, and other earnings of the individuals to help government fund public services such as education, healthcare, security, and infrastructure. The tax deduction is shared between the employer and the employee as both contribute a portion towards these benefits. Abdullahi Gondu is an economic expert. Alongside other beliefs, tax policy will not only curtail tax evasion but grow and better the economy.
People earning less than 800,000 and below per annum are completely exempted from paying tax. Businesses with a turnover of less than 100 million and below, and asset capital of less than 250 million are also exempted
of the value added tax, which I think was 5% or before, but now it's going to be 7.5%. The proposal was 10%. After some years, it is going to be 12.5%, up to I think about 15%. But now it is 7.5%.
However, there are grey areas that often create confusion, while those of the informal sector and freelancers may not have taxes deducted at source will also feel the impact. These individuals are still required by law to declare their income and pay appropriate taxes.
The moment you have NIN, then of course that person is going to be captured. But government also has to make effort for those that are in the informal sector. They need to be captured so that government can, expand the tax nets so that these people will be known and their income is going to be taxed. Otherwise, government will be losing a lot of revenue.
Companies that are earning with a turnover of more than 100 million up, the tax was increased from 10% to 30%, in addition to 4% development levy. I feel if we want to promote industrialization, we want to promote business development, we want to create a healthy and conducive environment for businesses, that rate is too much.
Experts say understanding how personal income and payroll taxes work helps citizens comply with the law and appreciate how their contributions support social programs and national development.
All right. We've seen those reports. Let me go over to Dr. Haruna Yahaya, the ICANN president. And from the last report, I just want to pick out a bit of that and reflect it on what we heard here, that it would seem as if those who are the major beneficiaries of these reforms are the ones who are feeling so threatened or scared about it. And that, for me, should be the informal sector. So those who operate in the informal sector at such a low level, these are the ones, these are the people who are expressing the biggest fears and wondering, okay, so they say once you have an NIN, you have to be captured, you have to, declare what your income is so as to know whether you fall within the category to pay tax or not to pay. So you're looking at the informal sector with a huge population. How are they going to go about this?
Thank you very much. The easiest way of informal sector to be captured into tax rates is, one, for them to be registered with CAC to formalize their business, because in CAC you have categories of businesses. You can register as a business name or as a limited liability company, and as you grow, you become PLC. But even as it is, the small businesses are exempted if your turnover is below 100 billion, and I think the profit is also exempted. But the NIN, as it is not a new thing, because even the banking sector, everybody has TIN number, the BVN. So with that, your transactions can be formalized, and the fiscalization that the NRS will be doing through e-invoicing will be able to capture a lot of transactions. But the tax is not on seed is on the fruit. The tax law is not taxing the capital or assets, it's taxing the profit. So the small-scale business owners need not to fear, because except your profit meets the certain threshold before your income is taxed. So the bottom line here is that, yes, it's natural for people to be apprehensive on, particularly when something is new. But the businesses that are small scale are exempted. So also individuals earning less than 800,000 are exempted. But the law requires that you get it formalized, you register, you get your NIN or TIN number, you get your businesses registered so that it will become formalized. It is not only for the purpose of taxation, but it is even good for economic planning for the nation, because as it is, over 75% of Nigerian businesses are in SMEs, but the data for these SMEs are not readily available because they are not registered. That's why they are called informal. So the new tax laws try to formalize it so that it will help the government in planning economic activities, not only for taxation. Thank you.
All right. Prof, there are two questions, and I'm going to be putting those questions to Albert Farrell as well, but let me start with you. It's rising from what Dr. Haruna Yahaya has just said about the informal sector registering their businesses with the Corporate Affairs Commission. The first part of this question is there any truth in what we hear flying around now, that many companies are applying to the CAC to change the status of their companies to become registered as limited liability companies because there are advantages there? That's only one.
Thank you. Yes, I should take that.
Yes.
Okay. Yes. I think it is true. I say this because I've also personally interacted with someone who works with the CAC. And that is the experience. So the staff from the CAC, told me that, that for some time now, they're receiving volumes of applications for registration, but not just as a limited liability company, but those registrations are seeking interest in particular sectors that this tax law, is exempting. For example, trying to register business in the agri sector, trying to register business in the health sector. That these are the preponderant ones that are getting, because the economic development incentive. I think there's a section on the Nigerian Tax Act that has exemptions, Section 162 or so, that has exemptions, and one of those exemptions include agri businesses. So people are now applying to register businesses in the agri sector. The same with the health, pharmaceuticals, health sector. So yes, it is true. But let me also say that when we say exemption of companies with turnover of 100 million and below, again, it is with respect to the ones that are registered, with the CSC. The ones that are not registered, like the nano businesses, the one-man business, the Falconizer, and the rest of them, okay, they're also going to have exemptions. Okay, I'm aware that they are now working out, an arrangement where any nano business defined as business with a turnover of 12 million naira and below. So if your turnover, your sales in a year does not exceed 12 million naira, you are regarded, for the purpose of tax, as a nano business. And that nano business, all these people you find, all over, okay, are completely exempted from. So I'm not talking about the informal sector.
Good.
Yes, informal sector are completely, exempted.
Let me expand it with Albert Folorenshaw. give a practical example. This is Cyril Stober, and what I do is a vulcanizer, Cyril and Sons vulcanizers by the roadside, and just as a small addition, I have a groundnut roasting business, if you want to call it business, by the sideline. So I do vulcanizing and I roast groundnuts to sell in, paper packs and all that. And someone says, look, this is informal. You need to go and formalize by registering. Is this what we're looking at? And then someone says, but you see, you're a Nigerian, you earn income from vulcanizing tires and selling groundnuts. So prove to us that these two activities do not bring in money that should be taxed. So how do you assess that, and how do you capture me?
Thank you very much. I was listening and I was giggling when all those other comments were going on. So we need to be able to put them into perspective for companies and for individual or enterprises or partnership, as the case may be. So specifically for company, I think it's a bit clearer.
Right.
Which is, if your turnover is 100 million and below, you don't fall within the tax net. All right? Which means as a limited liability company, you are not liable to tax, even though you still require to file returns, so that we truly know that your turnover is within that bracket. Okay? And immediately you go out of that, you are liable to company income tax, 30% now, which we're hoping will drop to 25% if they activate a provision in the law. 2, you are also liable to 4% development levy to cover all the other earmarked taxes. All of those burdens are there for company. So, as an individual, as a sole trader, before I even go to the artisans at that lower level, they are all liable to tax under the state where they are resident. And I'm sure we're all aware that several states are harmonizing their laws on the basis of the foundation that are contained in the Tax Administration Act, in determining how they tax their own citizens.
Good.
The federal law, yes, covers income tax, but there are other other sources of income that each state must now determine how to tax them. Now, one, I will explain, sir.
Right.
One, if you have opportunity of going through what the Joint Revenue Board is doing with the state and they are harmonizing, they are looking at removing all the nuisance taxes so that we will be specific as to what taxes are collectible by each of the states, so that you don't drive from state A to state B and then you are paying stickers and all that. They are also determining those who are below a particular threshold that are totally exempt. All of the roadside corn seller, those who are using wheelbarrow, those who are, depending on the state, each state are determining that. Even some of them are excluding some, depending on what type of, if you are just an Okada rider and all that. So there are thresholds that are being set on state-by-state basis. If you are a groundnut seller, you have a organizer, you are definitely below those thresholds. And if you are not, you are only liable to tax to the state. And, that does not stop you from opening an account or having your tax identification number. Okay? You can put your money in bank. Even with the money in bank, they will be able to know the quantum of transaction you are involved in.
So I operate in an FCT in
Yes.
Abuja.
You are not liable to the federal government. It is to the FCT, which is you pay to the FCT IRS.
Exactly. So this is what causes the confusion among so many citizens, because states are also going to determine the thresholds for what they do.
Yes.
But you see, so a lot of people who are speaking out really need to know about that look, this law may be slightly different in states, and this hasn't been highlighted.
No,
this is the issue.
So if you look at the law that has been made, the Nigerian Tax Act, the Nigerian Tax Administration Act, if you go there, you will see the basis for the authorities and all that. But each state, most of the states even have their revenue authority now independent. They are not taken as ministry like any other one. So that is there. And they're making laws. Each state can pass law as to what taxes they are collecting from the citizens outside the already promulgated provision by the National Assembly. Okay, for example, the personal income tax is there, the rate is there. They cannot change that. But they can determine for individuals, they can determine how they tax categories of individuals. They can say that this levy, we are not collecting. You see, if you look at the provision, most of the taxes go to the state. The whole of stamp duty that is being collected at the federal level go to the state. If you look at VAT, we know the sharing formula, only 10% goes to the federal, okay? While the others is between the state and the local government. So they are looking at the productivity of those ones and saying that if these ones are really productive, why do we want to start bothering our citizens with nuisance taxes that are not really productive? All of those are part of the conversation that was being had with the state governors and governors forum before they supported the passing of this law. And they are hoping that the productivity will be huge, and then the state, the individuals, the low-income earners, the artisans, the roadside sellers, they are even having categorization as to those who will not be taxed at all and those who will be taxed on the basis of what we call presumptive tax, because they are not likely to be able to prepare an account, they are not likely to be able to file returns, but when you look at their, their lifestyle, you can't assess them to say, you at least you can afford so much. So it is not predetermined, but the foundations are in the law. And Nigerians should just be calm. Okay. Nobody's going after the...
You're all right, but
Yes.
bottom line is that this can vary from state to state. Yes, Mr. Hagwa.
Yes, like what Chief Albert has said, in Joint Tax Board, where all the states' internal revenue services are members, these numerous nuisance taxes have been harmonized into 9 per each state. And these 9 now, each state will now go to their National Assembly, to their House of Assembly, and then get it passed. So far, about 11 of the states have domesticated that. And that will eliminate this blocking of roads, collecting of these levies by cash. Rules are made, and specifically to make sure that at each level of the states, there is an element of standardization that is there. Then on the informal, he also mentioned about the presumptive tax regime. That regulation will be drawn up between JRB and the Ministry of Finance, and that will set the threshold through which those that will not fall under that particular, then the rest will be taxed accordingly.
Yes, please.
I can just add to that so that Nigerians can also understand that as an individual, your tax threshold, your tax rates are much lower than company. So if you are leaving your enterprises and you are converting them to limited liability companies, you are just looking for higher taxes. Because, a lot of people want to buy property in a company name. You buy property in company name now, you are not avoiding any taxes. As individual, we already know the threshold. If your taxable income is 800,000 and below, 0%. If it is 3 million, or the next level is 15%. The next level is 18%, followed by 21%, 23%, maximum 25%. So it's never going to be as high as that of a company. So there's no benefit in moving your business to, and as an individual, you manage your taxes within the state where you are resident. It has nothing to do with federal, except you pay VAT sometimes.
Okay, well, then it brings us to another aspect, which a lot of clarification would also be needed, and that has to do with the development levy and businesses, 4%. How will that be used? That is a question that so many people have asked. This 4% development levy. Who pays that and who collects that? Yes.
Okay. So that development levy, was introduced to subsume all the earmark taxes. When you say earmark taxes, taxes that are being introduced inside various specific, what they called very special projects by government. And when are you going to stop? You have one for road, one for education, one for water. So can we just have one that will take care of very, very important specific sectors of the economy? And that is where the 4% has come in, to subsume all of that. So, and the sharing, the first part of it goes to education, tertiary education. And I'm sure Prof is here, they can allude to the fact that it has supported in so many states, in so many universities and all that. And so that remains. And it's taking almost 50% of that, all right, followed by student loan, about 15% for student loan. Okay, so that people can take loan. That is what I'm talking about the 100% of the 4% now, the basis of the sharing. There's 8% that is going to Naseni. There's another 8% that is going to information technology. There's technology incubation. There's cyber security, about 4%, and then there's defense, which is further broken down into army, Air Force, broken down into pieces there. So when that money is paid, the basis for sharing or for payment is there in the law.
All right. Well, Prof, you'll recall that one of the earliest controversies when these laws were first introduced, or well, not even introduced, when the idea of the reforms was mooted, one of the earliest controversies had to do with education. With so many people saying, what's going to happen now?
Fund.
To TET fund, yes, and all of that.
Yes, yes, I agree with you. Well, just as you had, it's still accommodated. The 4% development levy also takes care of education. 2% of that, 50%, has been earmarked again, for education. And part of that too, the government says they also want to use that to scale the education loan fund. So it is still there, but not there in the magnitude that it used to be, because education fund, the old regime was 3%. Companies paid 30% and also paid 3%. But now the whole all those earmarked taxes, up to 5 of them, education fund and Aseni, police trust and all of that, consolidated as, into 4%. So it is that 4% that is now being, distributed. And as I said, education will also be having part of it, as much as 50% of 4, which is just about 2, compared to 3% that was going to TET fund, initially. So it's just going to be just marginal drop.
And the 4% is not supposed to be paid by small companies. Yes, and non-residents.
All right. Okay, non-residents, yes, and the
small companies are not supposed to pay.
At this point, we'll take a short break. When we return, there'll be more about the new tax regime, and we'll have other reports, and hopefully we'll accommodate your calls, wherein you'd have an opportunity to raise questions or make comments on the issues at stake. So stay with us. We'll be right back.
Yeah, but not there in the magnitude that it used to be, because education fund, the old regime was 3%. Companies paid 30% and also paid 3%. But now the whole all those earmarked taxes, up to 5 of them, education fund and Aseni, police trust and all of that, consolidated as into 4%. So it is that 4% that is now being distributed. And as I said, education will also be having part of it, as much as 50% of 4, which is just about 2, compared to 3% that was going to TET fund, initially. So it's just going to be just marginal marginal drop.
And the 4% is not supposed to be paid by small companies. Yes, and non-residents.
All right. Okay, non-residents and the
small companies are not supposed to pay.
At this point, we'll take a short break. When we return, there'll be more about the new tax regime, and we'll have other reports, and hopefully we'll accommodate your calls, wherein you'd have an opportunity to raise questions or make comments on the issues at stake. So stay with us. We'll be right back.
From the Atlantic across the savannah to the Sahara, we rise, a land of the free, we know they tire. We dream great, our spirit is undying.
Resilient, rooted like palm tree, we sway in colors, with undying demand. We make solutions, we ignite passion, yeah. Each ethnicity is unique, we are more than just a nation.
We are Nigeria, strengthening unity, we know they carry lives. We are Nigeria, together live the dream of a land with great destiny. We are Nigeria.
I am the real Nigerian. Brought to you by the National Orientation Agency, NOA.
The federal government of Nigeria warns vandals of national assets, electricity transmission towers, cables, and other facilities to desist from this act of sabotage. Vandalism is a serious crime punishable under the law. Vandalizing electrical equipment will affect millions of Nigerians, including your loved ones. Remember that national assets belong to all of us, hence the need to protect them. Report all cases of suspicious movement around electrical facilities to security agencies. When you see something, say something. This message is from the Federal Ministry of Information and National Orientation in collaboration with the National Counter-Terrorism Center, NCTC, Office of the National Security Advisor.
NTA Tuesday Live, a network issue-oriented innovation talk show.
Thanks for staying with us. This segment is when we open the phone lines and you have an opportunity to join in the conversation in the studio. And we always advise at this point in time that if you call it in and your call gets through to the studio, you turn down the volume of your TV set to avoid the hurlback or the echo. The numbers to call would be on your screens. And one way of knowing your call has been passed through is you'll see your name appear on screen. Once you see that, it means you can go ahead and ask your question or make a comment. And we advise that you do not bother too much about the greetings. Just a simple hello would do. Hello and your question or your comment. So we'll start off with this report from Enugu.
With the introduction of new tax laws on goods and services, including consumption tax and capital gains tax, Nigerian economy is aiming to boost revenue and regulate inflow of capital gains through VAT by strengthening state fiscal base. Financial experts are expressing strong advocacy for fiscal flow through production base to consumer level in goods and services, while capital gains tax will enhance state revenue through stock, land, and other capital assets.
Consumption tax, which is a value-added tax. Value-added tax, which we normally call VAT, is a consumption tax that is based on what you consume. In other words, if you don't consume an item, you don't pay VAT. It is the magnitude of what you consume that will determine how much you pay. So under the old tax law, VAT is usually, some of these things are computed based on the head office of the various factories that are producing consumable items. But under the new tax law, it has made it possible that the consumption is computed based on the place where it is consumed.
Some gray areas, according to experts, is the delay in installation of merchant bank system solution link in public and private offices for proper monitoring and accountability.
The gray areas I think people are not aware of now is that as we speak, we all know that the 2025 tax law commenced on 1st of January this month. And up to now, I would say that majority of the people that are supposed to be paying this VAT, that are supposed to be linked to what we call merchant buyer solution system, up to now, they are not being installed in their various offices. So you can see that we say, yes, we are implementing it, but in real terms, in actual terms, we are not implementing, because the merchant buyer solution system is supposed to be actually rooted in the office, or rather the organization that is paying the VAT, and linked to the Nigerian Revenue Service. In a nutshell, this is what I think is a gray area that the taxpayers are not aware of as we speak.
The new tax law on goods and services, experts say, is a win-win situation for both the consumer and the state.
All right, back in the studio here, we'll go to the matter of capital gains tax, after which we'll return to the ICANN president who's in Lagos. But let's begin here, because this also is one of the most widely discussed issues in the new regime, the capital gains tax.
Okay.
Prof, you want to go take a shot at that?
Yeah, thank you. Well, let me start by saying that I listened to some of the reports, and I think the last one was saying the new taxes that were introduced. I don't think any new tax has been introduced by the tax laws. I've also had maybe an opportunity to correct that impression that when people say, okay, now when people say, for example,
oh well, I think we'll have to fix that, because it seems that the calls are coming direct into the studio. This shouldn't be. It should pass through the system before it gets passed to the studio.
Okay, so the point I was making is that CGT was, harmonized with companies' income tax. CGT used to be 10%, companies' income tax 30% for large companies. But again, just as you had, there is a provision in the law for companies' income tax to be reduced to 25%, on the advice of the National Economic Council, and of course with the approval of the President. That's expected to happen later. But right now it has been harmonized, to 30%. And particularly with respect to shares, activities in the capital market, which is one that has been very contentious, it is affecting only the sale of shares, where the volume is as high as 150 million, within a 12-month period. Anything below that is exempted from CGT. Any sale of shares below, somebody also called me and said, okay, if he sold the shares, would CGT apply? I said no, as long as the volume, what you're selling is not up to 150 million, and you have not made a gain of 10 million naira on those shares, you are not paying any CGT. And again, if the shares are sold, for example, and the proceeds are also reinvested within the same 12 calendar months, again, you're not paying any CGT. Okay, so CGT only applies where number one is in excess of that threshold, And number two, the money is taken out.
150 million shares.
Naira.
I mean naira.
Yes. And then when you sell and you take the money out, the idea behind that is actually to ensure that when foreign investors come and they, buy shares here, they don't just take the money and leave. Okay, so it's meant to encourage reinvestment.
Okay.
In shares.
So the reinvestment would ensure that you're not paying.
The money stays. Yes. Once it is below 150 million, you're not paying. And the retail investors in Nigeria, the bulk of them don't do up to that volume. So they're not paying any CGT when they sell their shares.
All right. Let's hear from your perspective.
Okay. Thank you very much. Not too many areas of CGT has changed other than the rate. So we must also put it into two perspectives. There's CGT accruing to company, and there's always the one accruing to individual. Right. Now, if you speak to the one accruing to company, you pay your company, your CGT. The new law says that capital gains tax should be paid at the income tax rate.
Okay.
And the reason for that is that has always created arbitrage where people can do some form of tax planning and avoidance, which becomes, to some extent, can even be evasion. And so what they have said is that now, under the OECD, under the inclusive framework, they are working on reducing base erosion and profit shifting from Nigeria or low tax or from some underdeveloped to the developed countries. And so they are looking at a situation where under the OECD says that if you don't pay your tax in the country where the revenue or the profit or the gain was made, the holding company that is resident in another territory will collect the tax. So in order to reduce the taxes that have been lost or that may be lost from Nigeria to other countries, that is why the unification of the rate for capital gain and income tax was introduced into the law. And that is what really caused the argument, apart from the fact that a lot were not paying. And the provision that was included was to say that regardless of the quantum or the volume of the transaction, as long as you sell and you reinvest, regardless of the volume, as long as you sell and you reinvest in the Nigerian system, there is no capital gain. But if you sell and you don't reinvest, and the volume is above 150, or the gain is above 10 million, then the CGT will apply. And that is for corporate tax, for company. Now, for individual, the capital gain again is payable to the state where you are resident. Whether you are buying shares, you are selling land, or whatever, you pay to the state where you are resident. And the rate for individual is the personal income tax rate, which starts from 0. If your gain is less than 800,000, you pay 0. If it is additional 2.2, you pay 15%. Additional 9 million, you pay 18%. Additional 12 million, you pay 21%. And if it gets to 50 million, you pay 23%. Anything above that.
25.
But what we also understand is the fact that most states are also domesticating it.
Okay.
And the problem with that is that when you sell property, because for individuals in Nigeria, property is the main thing that generates capital gain, which the state are likely to get capital gain from.
Okay, so
the seller don't get to go to the state to say that I've sold. It is only the buyer who needs to perfect title that visits the state.
We'll return to that because that's an interesting aspect of it all. But we have a caller from Ogun State. Hello. Yeah, go right ahead.
Hello.
Well, Ifechuku from Ogun State, it would seem that you're discussing somewhere.
I want to ask.
Right.
The new tax law that they are talking on the television now, because I just collected my CAC of recent, and I saw the new tax law that my name has, that I'm able to pay the tax. I want to ask, is this for a business that is not open? such amount of 20 million or whatever that we pay this tax. And another thing, that tax, would I use the same account? Will I use the same tax name? Will I use the limited liability name to go and open an account for them to tax me? Or how will they tax on this very limited liability company?
Sorry, would you just repeat your questions, please? If you're still on the line, could you repeat those questions? I mean, so that...
Hello? Hello?
Yes, go ahead. Repeat the questions,
Hello?
please.
Hello? I said I just collected my CAC. The CAC I collected, I saw that the tax identification number is here. So I want to ask, will I use the same CAC name to go and open an account for me to be taxable? Or how will the tax be collected? That is number one question.
Okay.
Then number two, my business is not up to 20 million. Will I be taxed?
Okay. All right. So now we got that. So
what does this say? Just collected.
He said he collected CAC number. He was talking about
No, he collected CAC and there's TIN.
Yes,
and TIN number.
Yes. So is he going to open an account with that?
With that?
Okay.
Yes.
And two, his business is below 20 million. Will he pay tax?
Okay, so when you register your business with CAC as a limited liability company, automatically your RC number is used in generating your tax identification number. And you get it immediately on registration. And then you can proceed and do your business.
Okay.
Now, as you do your business, if your turnover is within the 100 million that we have discussed, he said his turnover is like 20
million.
He doesn't have to worry with any tax because he has incorporated a limited liability company. That's all. He doesn't have to pay tax, but that does not mean that incorporating the company also have obligation. You must prepare audited account. You must still file it so that tax authority will know whether your turnover is within that threshold or not. But if you run your business in your personal name or in an enterprise that is not a limited liability, you can just even prepare your account by yourself and send it to the state, to the tax authority of your state to say that this is my income and this is my expenses, just like any other company. Enterprises are not denied expenses they incur in doing business. They are also allowed to deduct their expenses. In addition to that, they will still claim their rent relief. They will claim pension. They will claim health insurance. They will, if they insure their life, they can still claim it. All of those are still available, even though you are running as an enterprise. Enterprise is not liable to tax. It is the individual who owns the enterprise that will be subjected to tax in his personal name.
And as he was talking about CAC number,
right?
Yes. If it's not up to 18 months or 6 months after the year end, it will not be required to file returns.
Okay.
So
until after
18 months for a new company. Because it's like it's coming out from the CAC. So the company will not have stayed 18 months. So it will not be required to even file returns.
All right. Let's head back to Lagos again, and we did say we were going to, after the question here about capital gains tax, we'll return to Dr. Haruna Yahaya. So let's get back to you and hear your take on that.
On CGT?
Yes.
Yeah, the CGT has been well explained. The moment your transaction is below, the total turnover is below 150, and the profits, the gain on it is less than 10 million for the whole year, you are exempted. And if the gain, even if it is above 10 million or the volume is over 150 million and is reinvested in the company in Nigeria, you're also exempted. So the rule about it is that the CGT majority of individuals that sells shares that sometimes ago that people try to offload for the fear of new CGT coming up is because they don't understand the provisions of the law.
That's the issue, because
You
a
don't
lot of
need to
people will
panic.
sell it off.
You don't need to panic because automatically you are exempted, because to see any individual or company selling shares over 150 million is no more a small company, or making gain of 10 million in 12 months is no more a small company. And also the specialized investors or businesses are exempted, like pension fund administrators or real estates or registered NGOs are also exempted from this CGT of paying CGT. So there's no need to panic for people to go to capital markets and start offloading their shares.
All right.
It is already exempted.
Okay, thanks. Back to the phones. We have Anthony calling in from Lagos. Hello. Hello, Anthony.
Hello.
Yes, go right ahead.
Hello, can you hear me?
Sure, go ahead.
Hello, can you hear me?
Yes, Anthony, we had said before that once your name is on the screen, it means your call is through. So go ahead.
I want to appreciate the gentleman in the studio with Nigerian Toba. Okay, my question is this. I'm an employed worker, and I pay personal income tax. From the income I earn, I have a little business that I'm running with my family. It's like an add-on to sustain up. How much tax do I pay? When I have made income tax payments, is it not double taxing? And then for my little girl that has a business as well, she's told me that the business is not registered yet. The tax authority in Lagos have brought a notice of tax payments to her. So I want clarity on this, please. Thank you very much.
All right. Thank you.
Okay, you can take that.
Right.
Okay, so as an individual, you are liable to tax on all the sources of income that accrue to you, whether from employment, from trading, from your property, rent, from investment, you have interest, shares, you get dividend. All of those are liable to tax. It is not double taxation. When you get your employment, your salary, it will have been taxed. If you are able to save that and use it to do business, that business generates another profit, not the same amount. Another profit from the money is liable to tax. Even if you don't do any business, you go and fix it in a bank, and the bank gives you an interest for putting the money in the bank. Before the interest is paid to you, they will even deduct 10% tax. So it is not double taxation. And I think it's very straightforward. If you have different sources of businesses, and as long as you are not below the threshold of taxation.
Exactly, that's what I was going to say. So you might have different sources.
Yeah.
What if all combined still below the threshold?
See, salary, there's nothing like below the threshold other than the 800. So as you are receiving the salary, even before you are paid, tax is already taken. Then you now have other businesses. Those are the ones that we will now have to look at and see, are you into roadside bully selling? I mean, this person is supporting the family. The state will say, no, this one is not taxable. Or do you have chairs that you have bought, you are renting out, you know, for people that want to come and watch TV in the evening near your house? Those are, like Prof said, nano businesses, which are definitely going to be below the threshold that different states will have set. They are not liable to tax.
Okay. Well, we'll still return to that, but let's take this call from Okafo, who's calling in from Anambra, I believe.
It's there. You can see your name. Go ahead.
But I've not seen my name on the screen. That's it. Okay. Hello, good evening.
Yes, good evening. Go ahead.
Okay, good evening.
Good evening.
My
Go
name is Prince Okafor. I want to appreciate the gentleman there. My question is, if I'm buying, paying for my ECN power recharge, am I doing? Are they offering me a services, or am I paying for a product? That's my number one question. Secondly, yes. I want to appreciate the federal government for the tax reform, and they want to make everything more transparent for informal sector and for the formal sector. Then I want to ask, why is it that the federal government itself that deem it fit to take time to reform the taxation department, but yet the federal government is not doing or putting a reform the way they govern the country to be more transparent, the way they are planning, putting everything in order for ordinary man to pay the tax, his or her tax, is not being implemented in one of the day-to-day activities of the federal government, the procedures, and every other arm of the government. That's my questions.
All right. Thank you very much, Okafo. You had two questions, but I believe that the one that is relevant to this conversation and tonight's program is the one you asked about if when you recharge you buy units for your electricity meter, whether it's a service or it's a product you are purchasing. The matter about why the federal government has not introduced reforms in other sectors is not on this table for conversation tonight. And when we do have a program on that, the appropriate government functionaries would address that. So we'll ask our guests to address that matter. So who takes that first?
It's a service.
Mm-hmm. Okay. Yes.
Right. Okay, so, I mean, he has just said that he paid PHN through his bank account. So you are sending the bank to help you transfer money to PHN. So definitely the bank is rendering a service to you by ensuring that the money you activate from your phone or from anywhere gets to PHN. And that is why they will charge you. In addition to the fact that there's also a 50 naira electronic transfer levy, which is also charged. So that if there is any dispute as to what happened, that instrument again can be presented in evidence in a court of law. So the bank is rendering a service, and they can charge you bank charges for doing that.
Now, for the distribution company which you are purchasing the units from, is that a product, or are they also rendering service to you, and is that amount you're paying also taxable? That's part of what I'm sure his question is also alluding to, because, well, he has asked the bank to pay the distribution company for him to have units for his meter. The bank takes out what is service. What about what he purchases from the distribution company? So
what he purchased from the distribution company is for him to get light.
Yes.
And he has paid the distribution company.
Yes.
That becomes income in the hand of the distribution company.
All right.
So in determining the turnover of the distribution company, that is part of it. And that is not even his business at all. It is the business of the distribution company who has now earned income, depending on how much it costs them to provide the light to him. So they will also prepare their own account and pay tax on their profits.
Okay.
Yes.
Mm-hmm. So,
all right.
Sorry, there's this information I want to pass with respect to that capital gains tax. Mm-hmm. Capital gains tax as it affects companies. If you bought shares, say 2 years ago, let us say you bought a share for 10 naira.
Okay.
And today, this year.
All right. It's on the capital gains tax.
Yes. CGT.
Okay, we'll return to that. But let me take on Umar Anachi, I believe, from Birnin Kebi. Hello, Umar. Hello, are you with us?
Okay. My name is Umar Anachi, calling from Birmingham, Kebbi. I have two questions. One is with regard to the income, like payee, that's tax for civil servants. You said if it is 800,000 naira and below, what of if it is something like 900,000 naira? Will you deduct that 800,000 naira and charge me on the remaining balance? Or since it is 900,000 naira, I'm in taxed net, so that you will charge me on 900,000 naira that qualifies me to be in tax net. I want you to explain on that. Then the second issue is, you see, there is VAT, there is income, company income tax. All this thing is to the company. Now, the company must run in profit, must not run in loss. Now, all those calculations that you add to the product come back to the customer. So at the end of the day, it was the masses that can suffer for whatever you collected as tax or as VAT from the company. Can we expatiate that so that we understand that masses will not be, relegated to the suffering that they are in for now? May God continue to bless our country. Thank you.
All right, thank you. Prof, the matter of pay.
Okay, I'll take the first one.
Yes, the first one.
Okay, yeah, payee. I think these questions are arising because of the way we also, narrate it. When we say that the tax law is exempting people who earn 800,000 naira and below. So the impression is if you earn a little above that, okay, that means you are also, captured. In fact, when you give that, narrative, it creates the impression that even those who earn minimum wage today will be taxed, because minimum wage for 12 months is 840,000. If you calculate 70,000 times 12, that's 840. So it means that even people earning minimum wage will be taxed. So that's why it's important we correct that narrative. The law even says that minimum wage earners are exempted. That's what the law says. It means that if tomorrow the government increases minimum wage from 70 to 100 to 150, it's completely exempt. So what I'm saying that the narrative should not be people who earn 800,000 below, but people whose, if your taxable income is 800,000, meaning it has enjoyed the reliefs. So, when I started, I gave an example. I said, for him that says his gross income is 900,000, he is likely not to pay any tax at all. So somebody who earns 1 million naira, 1.2 million even, is not likely to pay anything. By the time you remove the exemptions the person is entitled to, the reliefs, in the old order, the relief was just 20% of gross income plus 200,000. Okay, and then the other ones in terms of consolidated. But now it is no more. What we now have are the 6 of them which I mentioned earlier. Right. So by the time you remove all of them, you find out that the person earning 1.2 million, okay, will have a taxable income that will fall below 800,000. So for him, he's not likely to pay any tax, any personal income tax.
So I need to add to what Prof has just said, because his question specifically is that he's looking at the taxable income level. So if the taxable income is 900,000, does it mean that he's going to be fully taxed? That is the question. So the provision, the tax table is such that by the time you arrive at your taxable income, the first 800 of your taxable income is taxed at 0%. Everybody. If I earn 50 million, for example, and after taking all my relief, I still have 50 million, or whatever it is, maybe after taking all my relief, let's say it comes down to 48 million. The first 800 of my 48 million is 0%. The next level is 15%. So for him, out of his 900, the first 800 is 0. The remaining 100,000 is 15%, which is 15,000. So if your taxable income is 900, then you pay 15,000 naira. 15% of the next level. And that next level is a maximum of 2.2 million. When it gets beyond 2.2 million, it moves to the next tax table, which is taxed at 18%. So somebody that has taxable income of 25 million, for example, that 25 million is broken in this manner. The first 800, 0. The next 2.2, 15. The next 9 million at 18%. So it goes, that's what is called the top slice rate, graduated.
But you also know that Nigerians don't even need to bother about these things. All they need to do is to use the personal income tax calculator.
No, everybody does not have the calculator.
No, it's
you need to understand it.
Yeah, fiscalreforms.ng, you put your income there, and
just know the rate that is applicable to
calculates.
All right. Back to Lagos. The ICANN president, you heard the questions. Would you like to take a shot at the second question?
Oh, okay. The second question.
The second question is that the masses are suffering.
Okay. All right. We'll have to return to you because some of the audio challenges. Yes, but yes, let's hear from the president of the Chartered Institute of Taxation.
His position that it is the masses that pays the tax is not correct, because all the products and services that are for that group of populace, 90% of them have been exempted. So really, it is more of to the people who have the higher purchasing power. Though everybody goes to the market, but those things that are patronized by the low income and medium income have been exempted. Our VAT, we have about 39 items, which includes, the exempted and deserated items. All these items is targeted to protect, the down.
So even then, you have those that are also exempt. So you might not still be paying any tax on those. Yes. Let's take this call. Abraham from Adama. Hello.
Okay. It's good morning, Cyril, and panel of panelists there. How are you doing? Now, the question I have is that this one particular tax reform, how does it concern the civil servant? I want you to break it down to the layman in the state to understand this. Now, people are saying that by the end of the year, civil servants are going to be taxed, and we always have monthly pay as you earn. And how does it come that we will be paying at the end? Is the money going to be calculated and the FICO added up, and then we will be paid? It's going to be deducted by 12 months of the year. This is very serious, and we don't understand it. Break it down to me, my understanding, please. Thank you. Most especially my brother from Lagos side.
All right.
Thank you.
Thank you. Thank you very much.
Okay. So, as a civil servant, what you earn as far as government is concerned is salary. And salary is taxed on monthly basis. When you receive your salary, even before the salary is paid to you, the ministry or the government, either through the salaries and wages, whatever, will have calculated your tax and deducted it, and then you get your salary. That's whatever you receive is no longer liable to any tax. At the end of the year, it is the ministry or parastatal that file returns with the state IRS. If you're in Abuja, you file to just so that when you want to collect your tax clearance, the government will file a return to say that this is how much we pay this man throughout this year. This is how much tax he has already paid. So if you want to give him tax clearance, state this income and state this tax. Finish. You don't have to pay any other tax, except you have other businesses that you are doing outside your civil service responsibility. Maybe you have your own business, you have farm, and we have even mentioned farm. The provision of the law exempts, most farming business, whether it's limited or not, in the first 5 years, and other provisions. So, except you have businesses that you are doing outside your salary, you are not liable to any tax. Nobody is going to tax any civil servant at the end of the year. Taxes are not calculated on annual basis, except for sole traders or partners like us. Then we want to do our business, and then we have 3 months after the end of the year to go and tell the tax authority, this is how much I earned throughout 2025. Calculate my tax and let me pay. That is because I'm not under pay as you earn. I think it's very straightforward.
Okay. Hopefully that's been laid to rest. How are we doing with the sound from Lagos?
Yes, I can hear you now.
Right, just go ahead then.
Yes, the whole essence objective of this tax reform is to save low-income earners, either from the salary level or from personal income tax, or even the small SMEs, businesses. That's why all these thresholds were introduced to save the burden of tax on the low-income earners. And like the question said, the person earning salary, the tax payee has been deducted, and the threshold of 800,000, which is the taxable income, will be exempted 0 rate, and then it will not be graduated as the next band, 15%, 23% to the maximum of 25%. So if you look at it, majority of salary earners that are eligible to pay tax to the state will be exempted. And that's why initially the governors of the states and the chairman of state IRS were strongly against the reform, because majority preponderance of the taxes they receive are from salaries payee that workers pay to the state IRS. So they are losing that at the moment, but they've been compensated from the VAT and the CGT and stamp duties and other things like that. But generally, the low-income earner, either as individual businesses doing small businesses, or salary earners earning below the threshold, or even a company that does not meet up to the threshold, or the CGT that doesn't meet up to this threshold, are all 0 rated. And it gives room for businesses, small businesses, to grow, because tax is a function of business activities. It's not to tax the seed, not to tax the capital or asset, but the income. And income will come if there's a lot of activities, economic activities, that will generate income that will now, as you prepare your accounts, you'll be able to see the profit, and you take all the reliefs, you see the taxable income that will be charged to tax. So generally, the low-income earners in Nigeria should even celebrate this new reform, because it has removed the hook of taxation from their neck.
Mm-hmm. All right. Now let's come to the incentives under this new regime for companies and businesses. And when we step beyond that, we'll now look at failure to comply and what are the penalties. Well, let's start with incentives that this regime would encourage for businesses who are into production, for instance. And we've also mentioned the question of agriculture.
Okay, well, let me take the first shot. Yes, I think we've been touching on incentives, peripherally. A major incentive, of course, has to do with the thresholds we talked about, the complete exemption. If you're telling business that if your turnover is 100 million below, you're not paying tax, it's an incentive. So that's a major one. And then we also have incentives that you can also locate in the area of even the VAT. The fact that today, VAT, input VAT, can be recovered, recouped, unlike before, is also an incentive, particularly for businesses that are into, food and health. Those ones are zero rated. Zero rated means that they're not charging VAT. Of course, even under the old regime, they're not charging VAT. They were all exempt. But this time around, zero rate means they also have the opportunity to recover, unlike before, recover any input VAT they paid, in the course of, purchasing input. So I also think that that's an incentive. And then there is this sweeping one, the economic development incentive that we also have in the new tax laws. Economic development incentive that tends to promote, certain sectors, give incentives to certain sectors. There is the, for example, the replacement of the pioneer company, relief with that incentive, which gives companies now 5%. They are now allowed to enjoy 5% tax credit on any expenditure they make, which is classified as qualifying capital expenditure for the first 5 years. So that's also an incentive for companies to, go into investment. And finally, I also think it's an incentive. I said much later it's likely to be activated. The fact that companies' income tax today, there is every likelihood that it will come down to 25% because it's already provided in the law, from 30 to 25%. That's a major, major incentive for, companies because when you reduce a company's tax from 30 to 25%, it gives a company, a whole lot of opportunities, to increase its investable income. And of course, that will eventually rub off positively on the company's bottom line. So I think these are some of the incentives that are already embedded in these new tax laws.
Well, President CIT.
Yes, also in addition to that,
all right.
In addition to that, the economic development tax incentive, which is replacing the pioneer status, also is renewable for another 10 years. And there are other specific sector incentives like agriculture, 5 years tax holiday for agricultural businesses, crop productions, livestock and dairy. You also have manufacturing that is now zero rated on essential and VAT on essential goods and services. Also, we have this incentive for renewable energy that are exempted from the fossil fuel surcharge. Then the startups are also given some incentive on the investment. The small businesses, small companies also have zero rates for companies with turnover not exceeding 100 million, and then the assets not over 250 million. Then you have employment relief of 50% deduction of the salary for new employees. Then research and development is also up to 5% turnover on R&D. Just all these are to encourage businesses to look inward to expand their businesses. So some of these reliefs or incentives are geared towards encouraging businesses that will now generate more revenue that will be eligible for tax. Thank you.
All right, President CITN.
Thank you.
Yes, it's coming to place, and we all expect that for failure to comply, there would be penalties. But I also want to go beyond that and say there's the matter of self-assessment, and that some would say, is that a loophole? I'm going to assess myself, and what happens if I under-assess? That's one side of it.
Thank you very much. Self-assessment is it's a global practice, because the reason is that if you allow the revenue authorities to serve before they pay, they may not even locate some taxpayers. So it is your right. The taxpayer is treated as a stakeholder, and you are given the freedom to determine what you are supposed to pay, and you proceed to pay.
No one likes to pay tax, the big guys particularly, so
yes,
they under-assess.
So, yes, the under-assessment that will come, that's why at times there will be audit, there will be investigation when there are triggers. But the most important thing is that if everybody voluntarily comply, even if you under-declare, you will still get more than when the revenue relevant tax authority need to, assess everybody. Government assessment is no longer the in thing. Self-assessment is to give the person opportunity to determine. Then when you don't do it, if you don't register, like now, if you fail to register will involve getting TIN or CAC number and getting to the relevant tax authority. If you don't do that, you are liable to 50,000 the first time of default and 25,000 each month, that contravention continues. The essence of the new tax law is really not on punishment or penalties, but to encourage everybody to comply. But bearing in mind that not everybody will want to comply except when there is this type of provisions. Then if you don't file returns too, the first month of failure is 100,000 and then subsequently is 50. In the case of tax ID, you can also be liable to 5 million if anybody gives contract to an unregistered company or a company that has no ID. So that 5 million penalty. So those are to encourage everybody to be, because to get a tax ID is free of charge. You can even generate it yourself. If you're an individual, use your name, visit taxid.nrs.gov.ng or taxid.grb.gov.ng, and the steps are very, very seamless, and you get your tax ID, which will be later synchronized with the other IDs you have.
Okay, we just have a few minutes to go on this program, and from here we'll just take your closing comments. Let's start with you, the ICANN president. Let's hear from you, your closing comments in just a minute.
Yeah, I think I will close from the last question, which has to do with offenses and penalties. The whole essence is to encourage voluntary compliance, but it is absolutely necessary for taxpayers to be aware of offenses and the penalty, so that when the tax authorities are coming up with this penalty, you'll be able to understand where they're coming from. The sections that talk about 30 sections from section 100 to 27, or there are 127 of Nigerian Tax Act, talk about offenses and penalty, and that is a serious issue. So many offenses have been slated, like failure to keep proper records, provide information, deducting as not remitting, and also obstructing tax officers and so on like that. These are things that we as taxpayers need to be aware of as of right, so that you know when you violate the rule, you know the penalty from the offset. So I encourage all of us, all the taxpayers, all Nigerians to be well abreast with the new tax law, so that implementation will be seamless. Thank you.
Thank you very much, Dr. Haruna Yahaya, President, Institute of Chartered Accountants of Nigeria. Thank you once again.
Thank you, sir.
Right. So let's hear from you, Mr. Albert Falonishaw of the Presidential Tax Reform Committee.
Thank you very much. Just to tell Nigerians that the law has come to stay. We have some clarity as to the specific law that is being implemented to a large extent now, and it has taken effect. And going through the provision of the law, it is clear that there are specific provisions that are meant to reduce the burden of the low-income earners majorly, while the higher income earners are supposed to pay a little bit more, which is the normal thing that happens in any tax reform. No provision of the law allows a bank to tax you. They only collect their charges, though they've been given some responsibility as agent of tax authority to collect some taxes. Okay, and those are the ones that they are deducting. No, they are not after your cash flow and all that, and so you can leave your money in the bank. Don't take money out and allow armed robbers to pursue you. There's no provision in the law that says that any fund that is found in the account will be taxed. Of course, we also have to have the responsibility to file our returns. When you are doing your businesses, keep your records so that if you have incurred any expense in the course of doing the business, you are allowed to deduct it from your income, just like any other company. And I believe that with that, the fear of this tax coming up will begin to sit by the end of this month with the low tax that will be paid by so many people.
All right, and so we'll leave the conversation here at this point and say thank you to all our guests because we've just about run out of time. Next week, we'll be back with NTA Tuesday Live, but just to say thank you and good night to Innocent Ohagwa, 17th President of the Chartered Institute of Taxation of Nigeria. Thank you for being here.
Thank you. Thank you.
Professor Uche Waleke, always a delight.
Thank you.
And thanks for obliging us all the time.
Thank you, sir. My pleasure. Thank you.
Thank you so much. And thank you, too, to those who called in. Next week, we'll be back with NTA Tuesday Live. I'm Cyril Stober. Bye for now.